If you're wondering about taxes, this video is for you. Here are a few things that will help reduce your final taxable salary. In order to help out with the housing needs of employees, some employers pay a portion of their salary as house rent allowance. How to use HRA to reduce your taxable salary? The lowest of the following is deductible. The actual HRA received, 50% of your salary for metro cities and 40% for others. Actual rent paid minus 10% of your salary. Now what if you don't receive HRA for the entire year? If you are self-employed or do not receive HRA as a part of your income, you can claim your rental expenses as a deduction under Section 80GG. Again, the lowest of the following three provisions is eligible for deduction. You can only claim either one of these. If you are a salaried employee, you are also eligible for another deduction of flat Rs 50,000 as a standard deduction. If you received reimbursement for any of your expenses from your employer, don't forget to keep a record of the same, as you can claim those as deductions as well. Here's another trick that may help ease your tax burden. By using capital losses as an antidote, you can lower your capital gain tax obligation. Imagine you own a portfolio of two companies, A and B, with a purchase price of Rs 25 and 100 respectively. Shares of company A were sold for a capital gain of Rs 1 lakh during the year at a price of Rs 35 per share, whereas company B's share were sold for a capital loss of Rs 20,000 at a price of Rs 96 per share. How will this impact your total tax obligation? By offsetting your capital loss against your gain, you arrive at your net taxable income, which has been reduced from 1 lakh to 80,000. Let's assume the stocks were sold within 12 months. That's a short-term gain. Your tax obligation before offsetting the loss was 15,000, which has now been decreased by Rs 3,000. On the other hand, if this was a long-term gain, your tax would have been zero. How? Under long-term capital gain, you can get an exemption of up to Rs 1 lakh, so your entire gain would be tax-free. So it's always beneficial to hold your shares for the long term, as by doing so you will benefit from lesser volatility risk and the added benefit of an exemption of Rs 1 lakh. If you like the content, don't forget to subscribe to our channel for more such interesting videos, and also hit the bell icon to get notified whenever we post.